In this recording, I want to introduce you to the MixMax case that we're going to be doing throughout the term. I also want to just touch base and review just a tiny bit with you as well about the inventory count, because MixMax is a retail company, and so they have transactions related to inventory. So I just wanted to do a quick review just to refresh your memory. So the inventory is an asset account. We usually have a beginning balance, so that represents the merchandise on hand ready for sale. Inventory is going to go up when we purchase it, and recall it's going to increase for all costs. So that would include, typically that includes freight as well. So not only the purchase price, invoice price, but all costs to acquire the inventory and get it ready for sale. So purchasing includes not only the cost of the merchandise, but any freight to deliver it to our place of business. The other thing, though, if we buy goods, we might turn around and return some of those. So purchase returns cause it to go down. And also, if we get a discount on our purchase price, maybe for paying early, those purchase discounts cause it to go down. Okay, so beginning inventory plus our purchases, less netting out any returns or discounts, gives us our goods available for sale. Goods available for sale. Goods available for sale. And then, of course, either we're going to sell those, and that creates cost of goods sold, right? An expense. You would debit cost of goods sold and credit inventory. And if they're not sold, then they're still on hand in our ending inventory. Okay, so just a quick review over inventory. Okay, and then I also wanted to look at the MixMax company. So this case, again, it's going to be an ongoing case. And if you're like most accounting majors, you're going to really enjoy this case. It has been my experience, most students really enjoy it. At times it's a little bit of, has some brain teasers in it, and that's what makes it kind of fun. So we're going to step back. This isn't something you're going to be doing in Wiley Plus. You'll actually just be doing this case manually. And again, some students kind of enjoy that breather for Wiley Plus as well. So the first assignment is November, and we have 10 possible transactions that they give you. By the way, so in the first part, you have to determine, which of these are accounting events. And it even gives you a clue. Only 6 of them are actually accounting events. So recall, for something to be an accounting event or a transaction, the company has to both receive something and give something up. So if we sell something on account, we're receiving an account receivable and we're giving up goods. So there has to be a give and take. And then you're going to, I don't know what you really need to do, part B, recognize, so if we receive an account receivable, that's an asset. If we're giving something up, we've earned revenue, so that would be revenue. And then write your journal entry out. And then also repeat that or post your journal entries to the T accounts. So actually, in D, you're actually posting to the T accounts, but in essence, I guess you're redoing the journal entry. So here's going to be, let me see if I can take this. There we go. Interesting, all of its own. Let me shrink, see if I can shrink this up somehow so you can see all of it. Okay, there we go. So now you can see the whole picture. So I've given you journal space. You're already seeing transaction or event. The item number 2 is an accounting event. So cash came in, issued stock, we have a debit and credit, and then you're going to go down here to the T accounts, post your debit to cash and your credit to common stock. So that's all you're doing from the month of November. And then in December, this. Okay, so in December, you're given November's ending balance sheet, so you're going to see the numbers, the counts, and the balances you arrive at the end of November are also going to be here at the beginning of December. And then again, you're given 10 transactions. You're going to post those directly in the T account. We'll bypass the journal this time. And then I want you to write out a balance sheet, and an income statement, and then a statement of cash flow. The cash flow can be just a real basic statement. And so you have space for the T accounts. Let me talk about this real briefly. The T accounts are set up a little bit different in this particular problem. Anything that goes on the income statement is here. The balance sheet's a little, it does have assets, liabilities, and stockholders' equity, but they're rearranged. The case positions retained earnings close to these income statement accounts because recall, revenues and expenses get close to retained earnings, so we're kind of snuggling them together. There's usually these two columns for assets, and then over here will be area for liabilities. Okay, well that's all. That's just going to get you started, and do that, and we'll see how it goes. I also wanted to talk briefly about your Excel assignment. Your Excel assignment is taking exercise 9 and completing that assignment in Excel. What I wanted to make it clear to you, I've also put exercise 9 in the practice assignment, and those are always optional. But let's kind of take a quick peek at that. So you can work that problem or exercise here in Wiley Plus. Oh, it's being really slow coming up. But anyhow, so you can work it and know whether your content is accurate, and then put it in Excel. Of course, then much of the grading will be just based on, whether you've got your formulas correct and you've set up the columns and that sort of thing accurately.